special warm welcome. Good afternoon, Yang Berbahagia, Datuk Johar Chekmat, Chairman of MNRB Holdings Berhad, Mr. George Uman, Chairman of Malaysian Reinsurance Berhad, or Malaysian Re, Encik Zaharuddin Daud, President and Group Chief Executive Officer of MNRB, Encik Zainuddin Ishak, President and Chief Executive Officer of Malaysian Re, Mr. Anthony Lee Fook Weng, Chairman of General Insurance Association of Malaysia, PIAM, and of course CEO of AIG Malaysia Berhad, Ms. Loh Guat Lan, President of Life Insurance Association of Malaysia, LIAM, and CEO of Hong Leong Assurance Berhad, Mr. Marcel Omar Pap, Management Committee of Malaysian Takaful Association, MTA, and of course, CEO of Swiss Re Malaysia. Finally, ladies and gentlemen, a very, very special warm welcome to all our honorable CEOs. Thank you for joining us today. To all our distinguished guests, ladies and gentlemen, thank you for spending this wonderful afternoon here with us. How is everyone doing? Well, we certainly hope that you are all staying safe and having a fruitful week so far. My name is Nadia Heng, and I am delighted to be your virtual host. Now, it has certainly been a hot minute since our last event, and safe to say, we are thrilled to be back with a bang. On behalf of Malaysian Reinsurance Berhad, or Malaysian Re, it is my absolute pleasure to welcome you all to the Malaysian Insurance Highlights 2020 virtual launch. That's right, we have quite an eventful afternoon ahead of us. And to kick off our event shortly, not only will we all have the privilege of bearing witness to the launch of the second issue of Malaysian Re's Thought Leadership publication, but of course, 2 years after our first one, it's also set amidst quite a dramatic backdrop. In the thick of a global pandemic, it could not come at a more significant time. And besides this, in our midst, we also have a number of special guests, our titans of the industry, if you will, here with us, and of course, who'll be sharing a little bit later for what I'm sure will be a riveting panel discussion for some real talk on the Malaysian insurance outlook and challenges both present and beyond COVID. That said, we certainly hope that all of you will also join in this discussion and take the opportunity to participate in the discourse by sending in your questions to us as well. Now, without further delay, it is time to get this show on the road. And as we jump into the heart of today's event, ladies and gentlemen, as you all know, back in 2019, Malaysian Re launched the inaugural issue of its thought leadership publication, Malaysian Insurance Highlights, a research publication aimed to identify and analyze key trends in the marketplace and provide guidance as to their direction. And this was also part of Malaysian Re's initiative to really elevate the industry knowledge and insights into Malaysia's insurance and Takaful marketplace. So this year, Malaysian Re has done it again. The second issue to be launched, it examines the impact of COVID-19 pandemic on Malaysia's economy and its insurance markets, as well as seeks to delve deeper into the implications of this pandemic towards our domestic insurance industry. So, ladies and gentlemen, if I may invite you all to join me in the countdown from 3 in just a moment as we proudly present to you the virtual launch of Malaysian Re's second issue of Thought Leadership publication, Malaysian Insurance Highlights 2020. Are you ready? Here we go in 3, 2, and 1. have it, ladies and gentlemen, a big round of applause. The Malaysian Insurance Highlights 2020 is now officially launched. Congratulations to Malaysian Re on this important moment. And I'm sure that all of you will find it a most insightful and illuminating read. In fact, the findings of MIH 2020 are based on structured interviews with more than 30 executives representing 19 Malaysian insurers, reinsurers, intermediaries, and trade associations, and of course was published in partnership with Faber Consulting AG. Now, it is time to continue with our next big highlight of the afternoon. But before we do that, ladies and gentlemen, please join me in giving a hearty, warm welcome to a very familiar face indeed. He has been in the insurance industry now for more than 30 years and has been at the helm of multiple insurance companies in Malaysia. He is currently the President and Chief Executive Officer of Malaysian Reinsurance Berhad, Malaysian Re, and also a board member of PIAM. So, ladies and gentlemen, let's give a big hand as we welcome your moderator for today's roundtable discussion, Encik Zainuddin Ishak, CEO of Malaysian Re. A very warm welcome, Encik Zainuddin.
Thank you. Nice to have you back, Nadia, really.
Thank you so much for having me. How have you been?
Well, we have to improvise launching of our second Malaysian Insurance Highlight. I suppose there's always the first for everything, right?
Mm-hmm.
Yeah.
Absolutely. Well, I want to ask you, how does it feel to be launching the second issue, and watching it come to fruition, especially in such important and significant times like now?
I'm excited. I'm excited.
Wonderful. Well, congratulations once again. And I think it is time now to get our panel discussion underway. And Encik Zainuddin, are you ready?
Yes, please.
All right. So, ladies and gentlemen, let's bring out our panelists. So first up, joining us on today's panel discussion on Malaysian insurance outlook and challenges present and beyond COVID-19, our first panelist is an impressive gentleman indeed, Mr. Anthony Lee Fook Weng. Ladies and gentlemen, he is the chairman of General Insurance Association of Malaysia, or PIAM, and CEO of AIG Malaysia Berhad. Anthony Lee was elected as chairman of PIAM with effect from 22nd April 2016, and he has been in the insurance sector for over 20 years. Prior to this appointment, he was the CEO of AIG Vietnam from 2011, where his responsibilities included the development of a key growth country for AIG within the Asia-Pacific region. Next up, our second panelist, a rose amongst the thorns and an inspiring leader she is. Ms. Loh Guat Lan, President of Life Insurance Association of Malaysia, LIAM, and CEO of Hong Leong Assurance Berhad. Ms. Loh is the president of LIAM since 2019 and, of course, is currently the Group Managing Director and Chief Executive Officer of Hong Leong Assurance Berhad, with more than 30 years of experience in the life insurance industry. Her last role prior to joining Hong Leong Assurance was Vice President and Senior Director of Agency Malaysia, the first lady appointed for such position then in Malaysia and amongst Asia's 6 countries in her previous company. Moving on to our next panelist, a remarkable individual, Mr. Marcel Omar Pap, Management Committee of Malaysian Takaful Association, MTA, and CEO of Swiss Re Malaysia. He is a member of the Management Committee of the Malaysian Takaful Association since 2017 and has been chairing the General Takaful Subcommittee from 2017 to 2019. He is the Principal Officer of Swiss Re Kuala Lumpur branch since August of 2018, overseeing both the conventional and Re-Takaful operations of Swiss Re in Malaysia. Our fourth panelist, whom we are definitely pleased to have join us here today with a wealth of experience, Mr. Andreas Balman, partner of Faber Consulting AG. Andreas Balman is a partner of Faber and has more than 20 years of experience in international reinsurance, gained in Europe, Asia, and the Middle East. In 2013, he joined Faber from Saudi Re, a Riyadh-based reinsurer, where he served as Chief Underwriting Officer. Until 2010, he worked at Swiss Re, where he held several senior management positions, mainly in Asia. And finally, to complete our lineup of esteemed panelists, an accomplished expert in his field, Mr. Henner Arms, partner, Faber Consulting AG. He is a founding partner of Faber and has more than 20 years of experience in corporate and marketing communications, gained primarily in financial services and also in the consumer goods and the medtech industry. Until 2007, Henner was head of media relations at Swiss Re, in charge of the firm's media communications and financial reporting. Well, ladies and gentlemen, please give a big round of applause for our impressive lineup of panelists. And a gentle reminder to all of you who are watching right now, we'd love to make this as an engaging and interactive session as possible. So please do send in your questions and we will do our best to have our panelists answer all of them at the end of today's discussion. On that note, here to take over as your moderator, let's hear it for Encik Zainuddin Ishak, President and CEO of Malaysian Re. Encik Zainuddin, over to you.
Thank you, Nadia. Well, we have so much to ask and so much to share, but we have so limited time available. You are right, Nadia. We are very honored to have a very impressive and distinguished panelists. I only have three chapters of questions actually. The first chapter is the impact of the pandemic to the economy and Malaysian market. Second chapter, product and services delivery during pandemic, challenges and development opportunity. And thirdly, coping with pandemic changes and moving forward. For the first set, I will start with Henner. Okay, Henner, on behalf of Malaysian Re, Faber Consulting has interviewed executives of many Malaysia's general insurer in the late summer 2020. Since then, the pandemic has further evolved and we can later test our panelists here on what has changed since the interview. But first, please let us know what are the key findings from the survey. How did the pandemic impact our insurers according to the interview here in Malaysia? Go ahead, Henner.
Thank you, Zainuddin, and a warm welcome to everybody here from here in Zurich in Switzerland. It's a great honor to be with you here today, and our congratulations to Malaysian Re for staging such a fantastic event here once again today. As we heard already at the beginning, we had a very good participation for this year's Malaysian Insurance Highlight, and we are grateful to the contribution of the more than 30 interviewees of 19 Malaysian companies that participated in this year's Malaysian Insurance Highlights. As you will all know, the impact of the COVID-19 pandemic on Malaysia's insurance has been massive, as it has been on all other insurers worldwide. Basically, one can, I think, differentiate three different categories of how the pandemic affected the insurance industry. On the one hand side, there is obviously the impact on balance sheet and income statement. Secondly, then there is the impact on distribution and sales. And thirdly, then there is the impact on operations. Let's start with the performance and touch upon the other two as our discussion proceeds. Insurers agree that overall COVID-19 will be an earnings event, unlikely to affect the capital position of Malaysia's insurers. The main impact has been on top line. Personal lines obviously declined, in particular those closely associated with GDP, such as, for instance, motor, property, or travel. Also, commercial lines were affected, which are closely associated with trade and exports, such as, for instance, credit insurance. In addition, there was a limited impact on premium collection, as insurers allowed for additional installments to smoothen the effect of the pandemic on policyholders. When we move on to investment results, the impact that we have seen is divided. On the one hand side, equities, obviously, you know, all declined first in February, March, but recovered reasonably quickly by summer last year. However, fixed income declined significantly, and some interviewees during our interviews actually pointed out that their fixed income portfolio was down by as much as 50% by the end of the second quarter. On balance, the monetary policy of Bank Negara and of the government of Malaysia, these measures will obviously have the effect to stimulate the economy and curb the looming recession. But they will also have a lasting effect then on the fixed income portfolio, which obviously will have to cover these effects going forward. Then lastly, obviously, there is the underwriting results. Claims, in particular during the MCO, had been limited. Business interruption has not been widely written in Malaysia. In addition, the exposure is kept, and we have a clear tariff wording, which basically allows for infectious diseases to only be covered if they're confined to the physical damage caused on the premise. Therefore, the loss ratio that insurers have been seeing decreased during the MCO, benefiting from lower claims in motor, fire, and travel, and also to some degree in health insurance, as policyholder actually refrained from seeking medical or medical care for the fear that they could contact the infection. In fact, during the MCO, the patient load at general practitioners was sometimes down by as much as 50%, or in some cases even higher. Thank you. Back to you, Zainuddin.
Thank you, Hannah. That's very insightful. And my next question is for Andreas. Andreas, COVID-19 has a dreadful impact on Malaysian economy, with the mining, quarrying, and construction sectors experiencing the steepest declines. However, compared to the overall economy, the insurance sector has fared relatively well. What are the main reasons for this? Can you give your quick take on this, Andreas?
Thank you very much, Zainuddin, for that very interesting question. And I would also like to take this opportunity to thank Malaysian Re for allowing us to be part of this wonderful event. So really excited to be part of this panel discussion. Let's have a quick look at what really happened to GDP in Malaysia. And still, I believe it would, I have to admit, the graphs that we are showing here, you will see it when we published at the time when we finished the Malaysian insurance highlights. We did not know the fourth quarter results. Meanwhile, we know some of them. But let's have a quick look. The big picture didn't change that much. You're right in saying that the quarrying, mining sectors and construction sectors have been hit hardest. But let's also have a look first at the GDP composition in Malaysia. Together, the mining, quarrying, and construction sectors only account for around 14% of Malaysia's GDP. So even though the percentage, the relative decline in these sectors is enormous, with mining, quarrying for the first quarters down by 25%, for the full year, if I remember correctly, around 20%. And the overall contribution to GDP is not that big. But if we look at the most relevant sectors in respect of GDP contribution, such as manufacturing and wholesale and retail, which includes restaurants and accommodation, we can see that these two sectors account for around 40%, but have been hit far less hard than the mining and quarrying sectors. The wholesale retail sector only decreased by around 9.6%. That's still significant, of course. But the manufacturing sector only decreased by around 4.3%. And this also was partly due because of Malaysia's strong connection or trade connections to China, and a particularly strong stance of the industry in the electronics sector. So overall, what we can say in respect of GDP, MCO, of course, affected the wholesale, retail, accommodation, and construction sectors very hardly. But we also have to say, if we really look at the 4 quarters of 2020, they are significantly different in their performance. The second quarter was particularly bad compared to the first quarter, came down by around 17%. But the third quarter really clearly marked the turning point. In the third quarter, on a quarter-to-quarter basis, GDP increased by 18%, so basically compensated the second quarter loss. So that's about the GDP part. If we look, and particularly what happened in 2020, you asked me about the insurance sector's resilience. So that's an interesting question, and I believe to some extent it's still reading a crystal ball. If we look at the, maybe we can show a slide there. If we look at the Malaysian economy's performance over the past 10 years, we can see that thank you very much. We can see that on an annual compound growth rate, Malaysia's economy, so the GDP, grew over the last 5 years at an average rate of around 5.1%. But the insurance sector only grew at a compound annual growth rate of 0.4%, so significantly lower than that. There's an interesting twist to it, and I believe a very positive. First of all, I believe the 10-year performance of Malaysia's economies is striking. It's really a fantastic success story. It also means that Malaysia now is forecasted by the World Bank to become a high-income country by 2024. What does it mean, a high-income country? The World Bank classifies countries in low-income countries, middle-income countries, and high-income countries. And in 2021, the benchmark for high-income countries was $12,500 GNI per capita. Malaysia is already now at 11,200 GNI per capita. So very clearly, and what we typically see is the insurance sector is often growing faster than GDP if we look at economies with GNI's GDP per capita levels of around 4,000 to 5,000 and up to 10,000. So Malaysia has already reached a point where probably insurance could not be expected to grow much faster than GDP. However, it's still interesting to see that growth is lagging behind GDP and significantly lagging behind. But if we talk about resilience, it's not only about growth, it's also about bottom line. And I believe we will have a look at the results of the Malaysian insurance industry in 2020 later on. But that's a remarkable performance, and that's partly due to what Hannah said in the beginning. Some lines of business, such as event cancellation, business interruption, are not as popular or not as frequently offered and asked for or demanded for in Southeast Asia compared to some other parts of the world. So the major loss lines, for example, Swiss Re, I just read the press release a couple of days earlier this week. They have overall posted losses of $3.9 billion related to COVID-19. I believe that's a magnitude that we would hardly see with an Asian player. But that's it for the time being. Back to Zainuddin. Thank you very much.
Thank you, Andreas. Moving on, things are getting interesting here from here on. For PIAM and MTA, and I suppose I'm referring to Anthony and Marcel. Regionally, GDP growth rate of 6.2% and non-life insurance growth rate of 6% are closely aligned to the 2015 to 2019 period. However, Malaysia is the exception, as the non-life growth is lagging behind GDP. Given that non-life gross direct premium and contribution in Malaysia is only contracted by negative 0.1% into 2020, Malaysia GDP contracted by negative 6.4% in the third quarter. As a matter of update, the fourth quarter GDP contracted by 5.6%. The low correlation is a good thing for Malaysian insurance market in 2020. However, in addition to the legacy of tariff market, would you like to comment on the other factors for Malaysian non-life insurance premium lagging behind the GDP? Do you see this changing in the future, especially after the disruptive pandemic? This question is, as I said, for both Anthony and Marcel. Let's hear from Anthony first. Go ahead, Anthony.
Sure. Thank you, Zainuddin. Pleasure to be here. So let me just comment. I think, as you've said, last 5 years, anemic growth. And I think there's a couple of key factors in there. First one is the obvious pressures from competitor action. There's been quite a bit of M&A in the past 10 years, so new entrants looking for market share. There's been pressures on expenses, management expenses, rising wages, inflation, etc. from that action. We've also got, tariff rates, which were fixed. And therefore, we've had inflationary pressure on motor parts. And also you'll see that cost of repairing technology in the new cars is significantly more expensive, and prices haven't, gone to reflect that. Accident rates remain the same. We've also got some cannibalization of the conventional market to Takaful. So, you'll see that distortion. And I think the overall picture still shows kind of slow growth. Another factor is the outflow of commercial risk to Labuan and Asean insurers. That's particularly around marine, aviation, and transit insurance. We've seen that happen. Foreign workers insurance, that was a big scheme, and that was transferred to SOXO at the beginning of 2019. So that is another additional factor. So what do we need to do? We obviously need to work harder to address the income protection gap. We know that exists. There is underinsurance in the market. It is segment-based. So we need to make sure we can, come up with products that, service the risks and create more value and utilize innovation. We'd like the regulator to move more towards a principle-based versus a prescriptive rules-based regime. Also, public awareness, without any doubt, is very low when it comes to outside the urban areas. There's still a feeling of, it won't happen to me, and that's going to take time. Probably needs intervention with government policy as well. But PIAM is working on some projects. So we're looking at quite a detailed qualitative and quantitative survey on understanding the customer segment needs, types of intermediate service that they're willing to pay. But the pandemic has shown certainly that technology adoption is there and it's high. And so we need to tap in on that.
Thank you, Anthony. Over to you, Marcel.
Okay, Assalamualaikum and good afternoon. Also from my side, a warm welcome. I mean, looking at it from a Takaful perspective, the situation is a bit different. As Anthony mentioned, there was some cannibalization. If we look at the Takaful figures in isolation, actually, the annual growth from 2015 to 2019 was every year higher than the GDP growth. So annual growth rates were between 5 and 16%. And even last year, the growth was 4%. So overall, Takaful has done well in the last 5 years, albeit naturally from a low basis. So market shares has increased from 12 to 16%. So what are the reasons for this? I think it's a focus on retail lines, especially motor and fire, which are a bit less price sensitive as they are still under a partial tariff regime. In addition, Takaful operators have started quite early on the digitization journey. And if you look at the sales, more than 32% of policies are sold on online channels by general Takaful operators, whilst the general insurers, this percentage is below 18%. So looking now on from the overall non-life market, Anthony has mentioned already a few reasons for the stagnating market growth. Let me add one more reason, and this is the soft market, all of the actually we have experienced for the past several years due to the abundant capital available. In addition, Malaysia has very little net cat exposure, and by this it's not so much subject to upwards price pressure as other countries in the region who had recent net cat experience. Just this month, actually, March published a study which shows that property prices increased in Malaysia much less than in many other countries in the region, such as Singapore, Hong Kong, India, Philippines, Indonesia, Japan, or Thailand. Quarterly price increases were only 3 to 8% in Malaysia, while in all the other countries I mentioned, price increases were double digit in each quarter. So that's, I guess, also another reason why the market size is not growing, looking at the overall market. I mean, Anthony has mentioned already some of the reasons or measures. I think he's absolutely right that awareness is still low. Insurance penetration actually is in Malaysia is still below the average of Asia with 1.2%, whilst overall Asia is 1.4%. And from a MTA perspective, we're also doing a study specifically for the B40 segment, as we feel there is still a lot of lack of awareness, and that's a segment, especially the Takaful sector, will be focusing on in the coming years. Thanks.
Thank you, Marcel. Moving on. The next question, obviously, for Liam and MTA. Our research, MIH publication, very much focused on the experience of Malaysian general insurer and Takaful provider. In terms of impact, we have seen that losses has been limited, but also premium remain remarkably stable for the general insurers and Takaful. What was the impact of the pandemic of life insurer, family Takaful operator? And I would like to hear from both Guatlan and also Marcel. Why don't we start this with Guatlan? Go ahead, Guatlan.
Thank you. Good afternoon. Thank you, Encik Zainuddin. I also like to thank Malaysia Re for having me here this afternoon to witness your official launch of the MIH 2020. To go straight to the statistic that I have here, basically for life insurance industry, based on January to December 2020 statistic, the life insurance sector recorded a moderate single-digit growth in total business in force despite the challenging business environment due to COVID-19 pandemic. To be a bit detailed, the total in-force premium increased by 5.3%. The total sum assured in force grew by 4.3%, and the total number of policy in force recorded a marginal growth of 1%. However, in terms of new business performance for 2020, the industry recorded a slight decline of 3.2% in new business total premium. New business sum assured also declined by 7.2%, and the number of new policy also dropped by 7.1%. I think in conclusion, I can say is generally during these unprecedented times, consumers are more mindful about their spending and tailoring their purchases to a smaller policy due to the COVID-19 crisis, which might have affected their financial situation. In addition, during an economic slowdown, there's always a tendency to shift from a saving components type of plan to a basic plan with emphasis on the protection, and especially for a certain segment of customer. The slowdown in purchase of new policies is also due to the activities of face-to-face life insurance selling were restricted during the MCO during the pandemic. All right. And however, as a whole, we are very positive about the industry performance in the coming months with the opening of more economic activities. In fact, our distribution channel are all ready to gear towards the recovery path. We are happy with the support of MII together with Liam during this period. MII introduced the virtual PCE examination in April 2020, so that the recruitment of new recruits can continue to take place. As of end 2020, the number of registered agents with Liam is 82,000 compared to 75,000 in 2019. New agents joining the industry in 2020 is about 18,000 compared to 15,000 in 2019. That represents a growth of 22.3%. So for life insurance industry, I think the distribution channel is all set and looking forward to recovery during the next couple of months when the economy is open up for more activities. Thank you.
Thank you, Guatlan. Well said. I'm very optimistic now after listening to you. Over to you, Marcel. How about the Takaful industry on the family side?
Actually, family Takaful has done well in 2020 because despite of COVID, the overall contribution increased by 7%. And it's interesting to look at the split of numbers. On one side, we have got certain business lines which reduced, which, for example, ILP reduced by almost 20%, which is in line with the comments Guatlan said beforehand, the people moving away from saving products. And group family and health also reduced by 26%. But at the same time, MRTT, so credit business, still increased by 5%. And the individual family and health business increased by 87%. So overall, despite of COVID, a good year for the family Takaful operators. I think reasons for that is definitely an increase in awareness of the population of the benefits of health and life insurance, or in this case, family and medical Takaful. Then also family Takaful operators were able to swiftly change to digital and e-platform sales. So agents were able to sell new business virtually. Also, procurement processes have been made easier, for example, in respect of compliance. And by this, so I would say family Takaful has weathered the storm good and is in a good shape to hopefully further increase the business also in 2021.
Thank you, Marcel. Well, I can summarize it. Both associations, both MTA and Liam, both are optimistic, So that's good to hear. Moving on very quickly, this is for Andreas. Andreas, very quickly, the economies are growing more upbeat in respect of Malaysian economy prospect for 2021 and beyond. Do you expect trickle-down effect on the local insurance industry? Positive growth prospect would be very welcome as among all ASEAN insurance market, Malaysia performance was the weakest over the past 5 years. Quickly, Andreas, very quickly. Andreas, if you can unmute yourself.
Thank you very much, Zainuddin, for that question. I believe some of the reasons have already been provided and shared by Anthony and Marcel earlier, why Malaysian insurance growth is lagging behind economic growth. As you asked me to do it very, very quickly, let's have a quick look, which I found a very interesting effect is, if you compare gross premiums written, basically in the first half of 2020 compared to the first half of 2019, and compared the earned premium income of the first 2.5 years, then you can see that there is a smoothing effect. Obviously, the COVID-19 impact on earned premiums is less pronounced than on written premiums, because what was not newly written because of declining number of car sales or whatever will only manifest as in your income statement later on. So even though what I'm saying is on an earned premium basis, we have not yet seen the full impact of the premiums not written during the COVID-19 crisis. And second, the COVID-19 crisis, I believe it's still, as I said earlier, it's still not 100% over. So we need to see how really the global economy will be affected. But I'm relatively confident that Malaysia will see some market or some insurance growth in 2022, partly also because Malaysia's economy has strong links to the Chinese economy, and China has recovered remarkably quickly. Very interesting side effect. Let's have a quick look at medical insurance. In Bank Negara statistics, medical and personal accident insurance are consolidated here. That's what you see in the graphs. But if we break it down between personal accident and medical insurance, we can see that in the first 6 months of 2020, medical insurance grew by 3%, while PA, also because of the movement control order, declined by 13.4%. Over to you again, Zainuddin. Thank you.
Thank you, Andreas. Now we move to Hannah. Very quickly as Hannah. For many of the ASEAN market and Malaysia as well as successfully contained the spread of the virus in the first and the second wave until late summer 2020. This has been partially attributed to the experience of the region prior to the epidemics. What did our interviewees see this? A quick answer for you, Hannah.
Thank you, Zainuddin. Yes, very quickly. I think there is obviously large discrepancies between countries with regards to their performance. And obviously, since, at least from a European perspective, many of the Asian markets performed a lot better than we here in Europe, the question was if, the Asian markets, due to the historic experience with previous pandemics, had been better prepared. In general, I think what we can see here is that Malaysia's insurers agreed that no, they had not been prepared. They had none of them, or hardly any of them, had actually expected that a pandemic could bring whole economies to a complete standstill. However, I think what is important is that the industry was quite encouraged and actually also quite proud about how fast then, as an industry, as the associations, as also the regulator, they reacted to the pandemic, and they came up with a concerted effort to respond to the crisis. So I think preparedness, no, but reaction fast. I think that was the general consensus, how the industry reacted. Thank you, Zainuddin.
Thank you, Hannah. Now we move to the next chapter, that is product and services delivery during pandemic, challenge and development, and also opportunity. I suppose I would like to invite Hannah also to answer the first question. Much has been speculated about the impact of the pandemic on awareness for insurance product and demand from customer driven by a greater risk awareness. What is the assessment of our insurers? Do they expect an increased demand for insurance product? Over to you, Hannah.
Okay, thank you very much, Zainuddin, for this question again. Well, most interviewees that we've spoken to believe that the way how the industry handled the crisis actually contributed to strengthen its image. Insurers provided a wide range of measures to cushion the impact of COVID-19 and the subsequent effect of the MCO on policyholders. Most prominently, obviously, as you all know, Malaysia's insurers, together with the associations PM, LIAM, and MTA, launched the COVID-19 test fund for medical insurance policyholder and medical Takaful certificate holders. The fund, managed by Malaysian Re, addressed the need to increase COVID-19 testing and help insurers with the cost. Secondly, insurers collaborated closely with Bank Negara and allowed policyholders to defer some premium payments or pay in installments that usually were not available. For instance, if during the MCO in fire insurance, a premise had to remain idle and unattended for more than 30 years, usually insurers would have cancelled that cover. They did not do so during the MCO. So overall, I think the industry made a big effort to smoothen the effect of the MCO on policyholders. They were also supportive to insurers in filing claims. For instance, in motor insurance, claims filing was accepted via WhatsApp or SMS, something that had not been possible beforehand. However, when we ask then the insurers if they think that will have a lasting effect on demand, the majority of Malaysia's insurers do not expect that the pandemic itself will have a lasting effect on consumers' awareness and demand for insurance products. In Malaysia, at least at the time when we did the interviews, COVID-19 was predominantly perceived as a health and economic crisis and not so much as an insurance event. Where the virus caused heightened awareness, insurers were skeptical that consumers' memory of the benefits of insurance and the way how they could actually manage risk with through insurance will outlast the pandemic. Since COVID-19 had its strongest effect on the industry's top line, recovery will obviously depend very much on the speed of the economic rebound. Consumers and SMEs are expected to spend less during a recession. So the longer a recession would last, the more prolonged an insurance recovery. Finally, some insurers bemoan that the postponement of the de-tariffication although many agree that the delay of that postponement of the de-tariffication was the right measure at the time, they still emphasize that current rates in motor are unsustainable, and the longer an adjustment takes, the worse the effect on insurers. So there is some gains, but obviously also some challenges here. Over to you again, Sadin.
Thank you, Hannah. The next question is for Piam, meaning is for Anthony. I really like this question. Despite a raging pandemic, general insurance and Takaful demonstrated remarkable resilience in 2020. The market registered a gross direct premium or contribution of 20.7 billion ringgit, which is a minimal contraction of 0.1% over the same period in 2019. This is a remarkable achievement given that 70% of our country insurance premium are comprised of a motor and fire, consumption-based sector, which are particularly prone to economic downturn, such as currently experienced during the pandemic. Whilst the over-reliance on motor and fire have not done much harm to the industry during the pandemic, do you think this is also inadvertently justify the lack of diversification? Looking ahead beyond the pandemic, to prevent complacency, what would the general insurers to OPIA members do more to diversify their other classes of business? Over to you, Anthony.
Thank you, Zainuddin. Obviously, we don't want our fortunes tied to how many cars get sold in the economy, but the sales tax relief last year did help. And also, I guess, fear of riding in public transportation is another issue. But, a couple of things that we can do and we need to do. For sure, capitalize on we have some degree of freedom under Tariff 1B for the auto side. So there is a bit there we can do some greater product differentiation. We need to accelerate the innovation and product development to cater to consumers' evolving needs. We see that there are evolving needs changing as a result of the pandemic, and that will help us create more diversification in portfolios. In addition, there are also new emerging risks, the non-conventional risks, such as climate change, environmental liability. Those are areas also where we will need, kind of government legislation to help push it, but definitely these are rising risks that everyone needs to be aware of. The pandemic has, as I said earlier, speeded up the adoption of digitalization and tech. Consumers' behavior has changed. Their risk profiles have changed, right? Depending what sector they work in. As we heard earlier, some incomes have been hit and they need to relook at the insurance that they buy. Some have actually benefited. But ultimately, the increased competitiveness should lead to optimized solutions, not just price wars. We actually need to focus on service delivery. And I think you've seen that. We definitely have, as an industry, in terms of motor claims, certainly a lot less complaints emerging because everyone's had to up the game. So more to come, but I think further liberalization will certainly help more.
Thank you, Anthony. My next question is for Guat Lan. We have seen that although a pandemic like COVID-19 can be an enormous threat to the prosperity and well-being of the economy, company, or family and individual, nevertheless, our general insurer expect no lasting impact in terms of insurance demand. Is that similar to Malaysian life insurer, although COVID-19 is a threat to the life of many people? Over to you, Guat Lan.
Thanks, Encik Zainuddin. Yes, for the life insurance sector, we also does not expect a lasting impact on the demands for life insurance coverage. In fact, difficult times like these will remind people how uncertain life can be and the importance of providing protective financial cover for the family in the event of death or illness of the family breadwinner. The household will not only lose its source of income, but also lacks the fund to pay for the unexpected expenses. So Liam and its member companies have come together to assist Malaysians who are affected by the pandemic to ensure that they are able to continue their livelihood during the pandemic. Some of these measures we have carried out. For example, the first one, the deferment of 3 months insurance premium payment. In other words, policyholder, whoever is affected by the COVID-19, are granted a 90 days deferment or no lapse guarantee for 3 months. This facility was made available from last year, April, and now extended to June 2021. During this period of time, policyholder will continue to be protected even if they are not able to pay for their premium for 3 months. For this initiative, more than 1 million policyholders have been benefited and their total premium valued at about 1.6 billion. Initiative number 2, we also have this extension of flexibility to reinstate or preserve life insurance for our policyholder. Life insurance companies have also provided the following assistance to the policyholder affected by COVID-19 until 31st December 2020. For example, extended the period during which a policyholder affected by COVID-19 could reinstate a policy that has lapsed. We also provide them with option to restructure their premium payment and maintain their policy, importantly. This included changes in the sum assured, adjustment to the premium structure, and the conversion to a paid-up policy. Waiver of fees and the charges imposed for the changes made to the policy. And another flexibility is waive any penalties or consequences for late payment of premium, particularly where policyholder affected by COVID-19 and they are unable to access to the electronic payment channel during the MCO period. So individual life insurance company also have carried out extended additional relief measure for policyholders in 2021 in a form of, like, for example, financial assistance, which include hospitalization allowance or lump sum death or compassionate benefits. Another important initiative that is COVID-19 Test Fund. This is a collaboration between three organizations, that is PIAM, Liam, together Takaful industry, has set out an 8 million COVID-19 test fund in support of Malaysian Ministry of Health's effort to conduct more COVID-19 tests for Malaysians. This CTF basically provides a fixed cash reimbursement up to 300 ringgit for the cost of COVID-19 testing for policyholders who are at risk or categorized as PUI, which is person under investigation. Since the third wave of the pandemic, we have also even expanded the eligibility criteria to cover more people to do the test voluntarily in order to curb the spread of the virus. This eligibility of the expansion includes emergency, semi-emergency surgery, a systematic patient, and hospital admission. We also have worked with a few partnership with the several private labs and public screening facility to get special discounted prices for COVID-19 tests. All right. Apart from this, for Liam, also have this digitalization of life insurance business. During the past year, due to the restriction of face-to-face communication, many insurance companies have invested heavily in the IT to put in place online facility to continue servicing the policyholder and also to enable agents to continue to sell, especially to provide advice and services to customer to virtual platform. In view of the purchases of the life insurance standalone pure, in terms of the purchases of life insurance especially, the standalone pure protection term products is also made available through direct distribution channel, including the online channel since July 2017. Thereafter, critical illness and medical and health product has also been available on this digital or online channel in March 2019. The pandemic has also seen a number of life insurance companies becoming more innovative in their development plans, especially on digital development plan to suit the customer needs by introducing new plan with lower premium via the direct channel platform, which further enhance their value proposition. All right, the other thing is we all know insurance contribute to the social protection of rakyat by enhancing their financial security and peace of mind. Thus, consumer education is an ongoing commitment. Liam has consistently reached out to the public through various platforms, including the media, to educate consumer on the importance and the benefit of life insurance protection. Through our consumer education article, we highlighted the virtue of life insurance and continue to educate consumer on how the various types of life insurance policy can help to meet their needs and play a very crucial part of a sound financial planning. For example, our latest project, the #BukanExtra campaign, we use the social media platform and social media influencers to reach out to the young generation, to increase the awareness and education, especially to educate them on the importance of life insurance protection and financial planning, and to create especially a sense of urgency to act early. To this campaign, we emphasize the message that life insurance is not extra. In fact, it is a necessity. All right, so as we believe that consumer education is a lifelong process, Liam will continue to give commitment, strong commitment to work closely with various key stakeholder industry to outline various public education and awareness initiatives in our effort to improve financial literacy and financial well-being of Malaysians. That is about my update from Liam. Thank you.
Thank you. Thank you, Go Atlan. You mentioned about creation of the CTF. Well, I would say that, that is one of the finest hour of the industry. So congratulations to Liam, Piam, and also MTA. If we can move very quickly, next question is for Anthony. Aside from the impact on the premium, the domestic market has not seen significant COVID-19 related claim to date, which is a contrast with other developed markets in Europe and North America. This can be explained by relatively low take-up rate on business interruption or BI, which is an optional extension of fire insurance and as such come under the tariff. Furthermore, potential claims from BI are relatively insignificant given the tight policy wording. So the question is, what would be the structural change required to promote a higher take-up rate for the BI in this country? Over to you, Anthony.
Yeah, I think, ultimately it is because it's tariff, right? So it's, as you said, it's very tight because, it has to be, the risk has to occur on premises and it's very difficult to prove. We know there are lawsuits going all around the world in different markets on this very issue and will take quite a while to, evolve. But I think, because we went through SARS, so we're very kind of cautious on pandemic cover, and pandemic cover is such an unknown risk. I mean, if you look right now, you know, we're into second, third waves, we got variants. There are so many unknowns. I mean, there's no doubt we are learning from it. There are industry leaders that have products that with limited coverage and payouts, which are available in the market. So those things are there. But if you ask for true overall pandemic cover end to end, I think we just don't have enough data to be able to price it accurately. If we did, it would probably be exorbitant and unaffordable. So it's something that we have to move along and see how it goes. And I think, you know, regulators also need, and governments need to understand that this is a sovereign risk, right? Something like this is unprecedented, happening on a global scale at one time. I don't think there's ever been an event globally as broad spread as this right now.
Thank you, Anthony. Moving on very quickly, this question I intend for Hannah. Hannah, very quickly. COVID-19 has dramatically impacted every industry. But our interviewees have emphasized that the pandemic has also brought some changes that strengthen the way on how we as an industry operate moving forward. Can you give us a few examples? Over to you.
Yes, thank you, Zainuddin. And I think we had this discussion with your insurers in Malaysia that if we, you know, once we re-emerge out of this crisis, and I think everybody is keen to see the light at the end of the tunnel here. What is the learnings and what will stay in terms of you know, improvements? And I think overall the Malaysian insurers, and I think we hear that also a little bit already today in our discussion here, are convinced to come out of this crisis strengthened. There is a number of experiences which actually have, you know, encouraged people to believe so. First of all, there is obviously the experience with work from home, the seamlessness with which people were able to switch from office work to basically working from home. Actually surprised management, surprised people themselves. So that is a great consolidation and encouragement. Secondly, when you look at that, or when you you know, post it into the future, then you can clearly ask yourself, how much office space do we actually need going forward? So people see the potential for savings here, as going forward they might not need that much office space anymore. Certainly then, you know, we also see that if people can work from home more frequently, although everybody is keen to also meet again with colleagues, nevertheless, that would have a beneficial impact on you know, the lifestyle, the quality of life, because people have to commute less. So it's far more efficient if at least for 1 or 2 days per week people would have the choice. So these are very positive experiences. Then in addition, we are very much a relationship-driven industry where people really thought we have to go to conferences, we have to meet our clients and partners. If we can't do so, you know, in a trust-based industry, that was very difficult to imagine. Now we just finished the renewals here, the 1/1 renewals here in Europe, for instance. And surprisingly, the industry has demonstrated its resilience as also this renewals, similarly to the experience also that you have had in Malaysia, has worked very smoothly. So although we all agree that you know, we need you know, the face-to-face interaction, we are able to live with that for a while. So we can reduce on cost here. And we know that as an industry, we can continue to function smoothly. Then I think we touched already on the importance of the digitization. which is something that is definitely here to stay. Malaysia's insurers have taken a great effort to, continue to provide their services to policyholders. They have tied in their agents to, even during MCO, assure that business could continue. So that is a great experience. Business continuity processes themselves never been proven to such an extent before, and they obviously demonstrated that actually they worked quite smoothly. And then finally, I think what was also important, we had a very after the great financial crisis, we had a long phase of soft market, in which obviously policy wordings and conditions had been softened. All of that has been tightened now with the experience of the crisis, and people really revisited the risk management policies that they had in place and said, okay, fine, what do we need to do? How do we need to prepare also in light of systemic events like this pandemic, which obviously Anthony has pointed out has been a complete novelty to all of us. So how do we take precaution, as we know that going forward with climate change and effects like that, cyber, for instance, too, we have to be prepared for events that could affect us on a global scale and could affect many lines of business at the same time and affect assets and liabilities as well. So I think that is the dramatic that we see here with the COVID-19 pandemic, and people have to prepare better for that, and therefore they have adjusted their risk management.
Thank you, Hannah. The next question is for PM and MTA. Probably I would like Marcel to give your take on this one first. The net claim incurred for Malaysian market dropped to 53.3% in 2020. That's for general insurance, 52.9. General Takaful is 55.7. That's almost 5 percentage point drop from 2019, which translates into about 850 million reduction in claim. So meaning industry have additional profit of 850 million. While some attribute to the drop to the reduction in motor premium from a lower motor sales, but the fact remains that motor premium only contracted by negative 1.1% in 2020 compared to 2019. So the question is, what are the factors that contributed to the lower claim? Do you think that tighter underwriting discipline in partially de-tariff market contribute to the lower claim, or it was primarily an unintended function of the economic slowdown? Marcel, your take first on this.
Thank you, Zainuddin. If we look a bit more in detail, we can see that the loss ratio dropped mostly in business lines which were affected by the economic slowdown, such as marine, motor, medical, and personal accident. Just to give two concrete examples, for road fatalities reduced by 33% last year compared to 2019, and also private hospital admission reduced by 3.5% in 2020 compared to the previous years. And looking historically, also during the global financial crisis in 2009, when also the economy slowed down, loss ratio dropped by 5%, so in a similar range. So I have to say, I expect that this loss ratio drop was only temporary, and once the economy picks up, it will also go to pre-COVID levels or even beyond, due to some underlying factors such as the increase in motor BI severity in the claims and medical inflation. And the ongoing liberalization in motor and fire will also put pressure on the loss ratio.
Thank you, Marcel. Over to you, Anthony, a quick one.
Yep, I think Marcel's put it very well. I mean, if you think that, look at the number of deaths, right? So I worked out, I think it was 2,500 deaths a year, so 33% less how many lives were saved. So, go back to my favorite hobby horse. If they really took this seriously, allowed us to price appropriately, and took action on terrible drivers, everyone would pay less insurance. We wouldn't mind because the loss ratio would come down. Black and white now because of COVID, that incident last year.
Thank you, Anthony. Well, do we have the next question? Okay, maybe this is it a last question, Nadia? Oh, we have, no? Okay, we have time. Okay, let's move on. This question is for Liam and also MTA. Maybe we can start with MTA first, as usual. In Q2 2020, the total gross premium for new business has dropped by 37% to 2 billion as compared to 3.2 billion in Q1 2020. However, following the Movement Control Order, or MCO, and Recovery Movement Order, RMCO, the life insurance industry has a strong rebound by posting a positive growth in Q3 2020 with an increase of 44% in new business premium of 2.92 billion as compared to Q2 2020 of 2.03 billion. According to Liam press release dated 30th November 2020, the positive performance in Q3 was attributed to the improvement in the investment-linked business, contributing 94% growth from 737 million to 1.43 billion in Q3. What are MTA and Liam members' strategy in addressing the current low interest rate environment? Can we start with Marcel? Go ahead, Marcel.
Okay, thank you, Zainuddin. Actually, we have to note that family Takaful operators are less affected by the low interest rates, as they do not offer products with guaranteed financial returns, and are also not so active in the retirement product space. So I would say it's more or less business as usual for the family Takaful operators despite of the low interest environment. And they have also the focus on the mass affluent sector, on digital proposition, and as I mentioned earlier, on the B40 sector, and their policies tend to be more short-term. Talking on the effect of the low investment returns on the investments, I talked to some CEOs, and what they told me is that they hold more cash than usual and move into equities and foreign investments and wait for the investment yields to go up again before they go back to Islamic bonds and sukuks. Thanks, Zainuddin.
Thank you, Marcel. What's your view on this, Guatlan? Go ahead.
Thanks. For life insurance industry, Marsha had just mentioned about one of the reasons we are less affected, but I just want to emphasize that life insurance is sold on the basis of long-term saving and protection, and not purely on investment or projection. So it is also a very long-dated contract spanning over a period of more than 20 years. So therefore, any temporary fall in interest rate may not have an immediate impact on pricing and dividends. For example, when we sell our investment policy and the participating plans, we are required to do a projection of high and low rate. And for the low investment rate, we have been illustrating at a low rate of 2%. As such, short-term volatility will have very little impact on life insurance. However, if it's a very prolonged low interest environment, definitely it will affect most businesses, inclusive of life insurance. So insurer will need to take steps to mitigate such risk and manage the business accordingly. All right. In addition, the life insurance company have also need to conduct an annual sustainability test for investment-linked plans. Policyholders have the option of increasing their premium or maintaining the same level of premium or even modifying their insurance coverage. So life insurance plans are flexible to take into consideration and really take into consideration of the financial position of policyholder. Thank you.
Thank you, Gotland. Okay,
Yes.
this is definitely, Nadia, the last question, and the last question I reserve it for Andreas. Andreas, contrary to some other emerging insurance market, health insurance in Malaysia is underdeveloped. How could the public and the private sector join forces to shoulder the load of increasing healthcare costs and strengthen the country's financial resilience related to possible future epidemic and pandemic? Over to you, Andreas.
Thank you very much, Zainuddin, for that question. Interestingly, some of you might have seen it already, but earlier this week, the Geneva Association published a figure saying where they estimated that probably only about 1% of COVID-19 related economic losses, GDP losses, are insured. So we can see, and let us not forget, if we wouldn't have seen all the government stimulus packages worldwide, fiscal packages, how our sector, how our industry would be affected very, very differently. As such, and Anthony already said it earlier, pandemics is a tricky risk, and I believe, and there seems to be a consensus that to address that risk, the public and the private sector need to join forces. We need to look for public-private partnerships. As such, we can see that it's a more or less a political decision how to finance health expenditures in a certain market. If you look at the graph behind me, we can see that countries of similar income status, such as Germany or the US, in Germany, more than 3/4 of health expenditures are financed by government, by the central government. And to avoid misunderstanding, that includes basically all compulsory health insurance. So either if it's carried out with the private sector or with the social insurance sector, but it's allocated here to the government expenses because people have no choice. So the government obliges them to do. Whereas in the US, this is much lower, only 50%. So that's a political decision. However, if we look at if we have a closer look at the red bar of the columns, which is the private or the domestic private health expenditures used to finance the system, then what strikes really is that in Malaysia, the share of out-of-pocket expenses, meaning the unplanned expenses that are just being made to cope with an unplanned situation, are relatively high. They are the second highest among all the 6 countries here, only superseded by the Philippines, where the share is 54%. So coming back to what was said earlier by the Life Insurance Association, by Anthony, the key question in Malaysia could also be, how do you sell that value proposition to stabilize the private earnings situation or private income situation by lowering that share of out-of-pocket expenses? That would be the interesting question going forward to see, because the capacity for that is there and goes back to what was mentioned earlier, consumer education and selling the value proposition of insurance used to stabilize results and incomes. Back to Zainuddin.
Thank you. Thank you very much, Andreas. I suppose we have a bit of time, Nadia, for Q&A. Over to you. Why don't you handle the Q&A?
Sure. Thank you so much, Zainuddin, and of course a big thank you to our panelists for such a stellar session. However, while all of you were in the thick of things, we were busy collating questions from our wonderful audience. So ladies and gentlemen, a big thank you to all your overwhelming number of questions. We're going to do our best to have all of them answered right now. So let's jump right into our first question. Okay, so for our first question, we'd like to direct this to Anthony, Ms. Loh, and Marcel. In terms of public awareness on insurance and Takaful benefits, are we in the industry doing enough in understanding the real needs of the public, especially during the COVID-19 MCO situation? So Anthony, let's hear your thoughts first.
Thank you. I think we are learning. We are definitely, like I said earlier, we are doing a study now, detailed study. Individual insurance companies have all been reaching out through their agents and intermediaries And if you look at it, quite fast-paced. So even though the first few months was quite chaotic because, you know, whether we were essential service, who was allowed to go to work, all these things obviously very disruptive. But I think you'll find that the status quo has been good, and even if I look at, you know, complaint levels have actually come down. So clearly the industry has been stepping up. And as I said, adoption of digital means to service customers and clients definitely good. But you know, awareness on the whole difficult because campaigns are difficult to run at this time, right? And it still is quite a lot of face-to-face required for sales, and that it has definitely had an impact.
Thank you very much, Anthony. Next up, let's hear from Ms. Low. What's your take on it?
Yeah. Yes, thank you, Nadia. For life insurance, actually, pandemic itself, this pandemic, COVID-19, is the awareness that created to a lot of people. This is one of the education or one of the life learning experience, I would say. So I want to say is that whether have we done enough? I think there are a lot more to do, as I mentioned just now. Education, create awareness about importance of this. I think it is important. Is a commitment. It's a lifelong learning process. We have to continuous doing it. I believe there are a lot more we can do.
Thank you, Ms. Low. So before we move on to the next question, Marcel, would you like to add on to this as well?
Thank you, Nadia. Just one comment, as already mentioned. I think one key is to improve financial literacy, and actually MTA has embarked on several initiatives in this respect to improve the financial literacy amongst the public.
Thank you so much for all your thoughts. Very constructive indeed. Marcel, this next question coincidentally is also for you, from our audience. And it is would MTA be able to elaborate a little bit more in terms of the impacts of the pandemic on the B40 segment? So have there been any specific studies done and data collected on the pandemic impacts on the B40 community? Marcel.
Actually, we're embarking now on a detailed study on this segment. So I have to say, maybe in a few months, I can share more with you on studies. But what I can say is that several Takaful operators, family Takaful operators, are already offering products for this segment under the Perlindungan Tenangan initiative, and this will be going on, and I'm sure after the study we will be even more active in this area, in this segment.
Thanks, Marcel. Okay, Anthony, this question is for you. So how quickly do you expect the Malaysian economy to bounce back, considering vaccines rollout and government support, of course, but lacking business interruption cover? So what do you think?
Yeah, I think this will still be a recovery year, to be honest. First quarter 2022 it would be realistic, simply because it takes that long to roll it all out. There could be a couple more lockdowns, who knows? The numbers are still high enough and could spike. So we're not yet out of the woods yet, unfortunately.
Thank you very much, Anthony. Okay, we've got a couple more questions, perhaps. Let's move on to the next one. This is for Ms. Low and Anthony. So how do both of you expect the pandemic to impact insurance penetration and working practices going forward over the medium term? So let's start off with Ms. Low.
Yeah, thank you. Pandemic have created really awareness about importance of life insurance, and you need to really plan it when you are healthy, when your situation is rosy for everyone. So I think this situation has created a lot of awareness, and penetration definitely will help to improve. That's why you can see a lot of life insurance work very closely with Bank Negara, especially on Bank Negara initiative about our Pelindungan Tenang. That is to reach out to as many people as possible and showing that insurance is really very affordable. And one of the Liam initiatives that we have conducted, I told you, #Bukan Extra. This is also trying to create awareness that insurance can be purchased in a different platform, on a digital platform, in a very affordable way. So this is what we have done all together, and I believe as a whole, penetration will continue to improve.
Thank you, Ms. Loh. All right, Anthony, what about you? What do you expect from this?
Yeah, I think, definitely echo the sentiments on, fear of medical and health. And so we do see uptick in certainly interest, even simple policies that cover personal accident, etc. Even though the number was down last year, I know, but we certainly see, renewed interest. So we have to make policies that are affordable to, the different segments. And again, another area of awareness, so travel insurance, as it begins to recover, countries are mandating a level of cover that pays out for COVID. So we have, there are products out there now that are in place to allow that to happen. So that's another area that immediately, creates awareness and will become a forced purchase. So all of these things are becoming very necessary. Companies definitely are thinking about business interruption, future risks, right? So it could just be other sorts of diseases, etc., that might come along. Like I said, so everyone has got that foremost in mind. But I think the way of work certainly has been changed. So that is a different area, and we're yet to wait to see how that might affect the purchase of insurance. I think alluded to earlier, working from home, cyber insurance becomes much more prominent because we're all much more exposed to it. Unfortunately, the cyber criminals are enjoying this time. We see an uptick, certainly, and therefore the rates are going up. I mean, this is a global risk, and Malaysia won't be spared the pressure on increased rates as a result of this, unfortunately.
Thank you very much, Anthony. I believe we've got more questions, so we're going to hold you right there, Anthony, for this next question as well. This is also for you. The COVID-19 pandemic has undeniably affected the product offering in the market, and some insurers are imposing total exclusion on ICD cover in the market. However, there are insurers who are able to provide ICD cover as per revised fire tariff. So we'd be really grateful if you could share with us the market competitiveness and any support from PM on this particular matter. Thank you.
Well, I think PM typically, for anti-competition reasons, when they're not going to be telling people what they can and can't sell. I think that's obviously Bank Negara's remit. And different companies have different exposures. So like I said, there are still, it's still in the courts. There are many challenges happening by insureds in different parts of the world, particularly where wordings, we have had, obviously tight wordings because of tariff, but where there have not been tight wordings, these are really being challenged, and they will take time to go through the court. So as a result of that, some of these insurers are going to be very, very careful and cautious, quite rightly, because they've got to protect their balance sheet. We have risks for so many other things besides pandemic that happen every day, right? Floods, fire. So we need to be around and have the money to pay for all that. So that's the nature of what we're doing. Like I said, I think we just need to go through this. Hopefully, within a year or two, things stabilize, and then I think there will be a return to, well, whatever the new normal is. But I think we should let the others answer this question too. I think Hannah and the others, maybe a different perspective on insurers and how they're dealing with new needs.
Hannah, would you like to comment on that as well? We do have a couple of questions, or one final question after this as well. But Hannah, please go ahead.
Okay, thank you. No, I think obviously, it's difficult to allude at this moment in time in terms of coverage of pandemics going forward. I think what we learned for interviewees at least is that capacity in the moment as the crisis continues to evolve is very, very difficult to ascertain, and therefore it's difficult to see a way forward. But I think Andreas already mentioned that it is only imaginable that a cooperation, a public-private partnership would be the way forward for a risk as large as this one.
Thank you very much, Hannah. Okay, we've got one final question here from our audience, and this is actually for Andreas and Hannah, both gentlemen. So what are the key findings from MIH that differentiate Malaysia from other ASEAN countries in the recent Pulse publication? Anything that truly stands out for Malaysia? Andreas, would you like to go first?
Yeah, I will particularly thank you for that question. I believe it's really, some of you have seen our publication or the first launch or the ASEAN Pulse findings earlier, where we compared Malaysia to some of the neighboring countries. And there we could also see that if we look at consolidated portfolios, market portfolios, we can very much use an economic approach. But if we look at the particularities of a single market, such as Malaysia, we can see it's very, very different, starting with the interconnection, strong linkages between Malaysia and the Chinese economy. So that was interesting. I found it very, very interesting, the result situation that I mentioned earlier. If we really look at the operating profit figures that just came out by Bank Negara about a week or something like that, it looks like really, even though the Q4 numbers are still not 100% final, but the operating profit is remarkable. Mainly, of course, we have talked about that because of the very low loss ratio in motor for a certain period of time. Let's not forget that. I mean, it was down by 10 percentage points loss ratio in the second quarter, but then it came back to usual levels. But given the relative importance of motor, that affects the whole market performance for a single year. So that is certainly one particularity. The other one that was mentioned also, that business interruption insurance, event cancellation insurance are not that widely written or offered in Malaysia. So Malaysia's insurance industry could spare some of the negative effects that some other markets experience. I would like to hand over to Hannah, who probably has some feedback also based on the interviews from the Malaysian insurance market stakeholders.
Thank you, Andreas. Hannah, what's your opinion?
Yes, thank you. I think one of the most important findings is we have to keep in mind this crisis has been, completely unprecedented, and the way how the industry, together also with the regulator, but also with the policyholders, with the consumers, collectively have handled or have responded to the crisis is, I think, actually, the strongest feedback, I think, that will stay over time, that there is a certain consolidative sentiment here that the industry, that all of the parties have collaborated quite closely with each other to address and overcome this crisis and handled it quite well. Or handled it so far quite well. I mean, it's obviously enormous, but the way how regulators, industry, consumers, agents, brokers have stood together, I think, is what people have pointed out, filled them with confidence and also with pride.
Thank you very much, Hannah. And with that was all the time we had for our questions. But, a big thank you to all our panelists for your invaluable input and expertise. And of course, a big thank you to Encik Zainuddin for such an engaging session. And we truly hope that all of you have gained some new perspectives, guidance and insight as to how to navigate the market during these uncertain times. But first, now, Encik Zainuddin, before we wrap things up, would you like to say a final word?
I suppose, a quick one from me, Nadia. In conclusion, I have to thank you to first the panelists. You have given a lot of support and valuable insight and input. Thank you very much. And looking forward to have a similar session, I hope, in the near future on more contemporary issue that affect our industry. Secondly, the participant, I was told, Nadia, we have more than 280 participants. Thank you for your time and support. And finally, Nadia, I have to thank you for the injection of the energy, right? You make my job much easier. today, actually. Thank you.
It's been an absolute pleasure. Well, on that wonderful note, ladies and gentlemen, let's give a big, big round of applause once again for our panelists for an incredibly fruitful session. Ladies and gentlemen, with that, we have officially come to the end of today's event. And on behalf of Malaysian Re, we'd like to take this opportunity to thank all of you once again for spending this gorgeous afternoon with us. We hope that you've enjoyed yourselves just as much as we've enjoyed having you. And of course, we do hope that today's event will bring the insurance community closer together and elevate the collaboration amongst all of us for a better future of our industry. And don't forget, the Malaysian Insurance Highlights 2020 is now available on our Malaysian Re website, so feel free to download yourself a copy. Remember to stay safe, wash your hands, and we look forward to catching you all at our next event. I'm Nadia Heng, signing off. Take care and goodbye.